This video is going to be part 2 in a 4-part series on daily profiles. In this second part, we'll be focusing specifically on the New York reversal, what it is, why it forms, and how to identify it in real time. Let's get into it. So here we are in the PDF looking at the sessions, also known as the kill zones. You can see we have Asia, London, New York AM, and New York PM. Now for this strategy, we're not going to trade all of them. We're going to filter it down and only focus on London and New York AM. Specifically for the indices, these are the two sessions that give the most volatility and the cleanest moves. That's where we usually see liquidity get taken and real displacement happen. So we're completely ignoring Asia and New York PM. Our focus is strictly on London and New York AM. That's it. So what is the New York reversal? It's going to be a candle that looks something like this. First, we have an open, push to a high, then a low and close. Then the next candle goes open, push to a low, then a high, and close. Now how this differs from a London reversal is simple. In this case, London never reached a relevant PD array. So when price went open and pushed higher during London, it didn't tap into any significant PD array to actually form the reversal. Because of that, the market continues pushing higher. Then once New York opens, that's when price finally reaches the relevant PD array, and that's where the reversal forms. So the key difference is, London failed to deliver into a PD array. New York completes the move and gives us the reversal. So here we are with a bullish New York reversal. You can see London moves lower, but it never reaches a relevant higher time frame level. There's no delivery into a key PD array, so there's no reason for price to reverse yet. Because of that, price just continues to retrace. London basically sets up the draw, but it doesn't complete it. Then as we transition into New York, price finally pushes into that higher time frame key level. Now we've reached a meaningful area where the reversal can actually occur. Once that level is tapped, we get the change in the state of delivery on the lower time frame. That shift tells us the selling pressure is finished and buyers are stepping in. From there, we look for confirmation and position ourselves for the move higher. So the idea is simple. London sets it up, New York delivers into the level, and then we get the expansion to the upside. Similarly, with a bearish New York reversal, the concept is the same, just inverted. London retraces higher, but it doesn't actually reach a significant higher time frame key level, so there's no real reason for price to reverse during London. Then as we move into New York, price pushes into that higher time frame key level. Once that level is tapped, we get the change in the state of delivery on the lower time frame. That shift tells us the buying pressure is done, sellers are stepping in, and then we get the expansion lower. So again, London sets it up. New York delivers into the level, and then we get the move in the opposite direction. Now let's hop into TradingView and go over a few examples of this in action. So here we are in TradingView. The levels I'm marking out are session-based levels. This first range right here is our London session range. That's the high and the low formed during London. Then this level right here is the 8:30 a.m. open. This one here is the 9:30 a.m. open. And this marks the close of the New York AM session. Now what I want to show you in this example is how price reacts when it sweeps higher time frame key levels, and how we use that inside the New York reversal profile. So first, let's identify the basic key levels presented at the open of London. At the London open, we have these relative highs and these relative lows. These become our higher time frame key levels. These are the areas where liquidity rests. Now the first thing we need to ask is, does London sweep any of these levels? Looking at the chart, you can see that during the actual London session range, price does not take out the high or the low. Yes, price eventually sweeps the low, but that happens outside of the defined London session. So we are not going to count that as valid sell-side liquidity for this specific model. Now we wait for New York. Here we have the 8:30 open. You can see at 8:30 we get a buy-side liquidity sweep. But personally, I don't usually trade the 8:30 open because volatility can be very erratic. So instead of forcing a trade there, we wait for the 9:30 open, which is the official New York session open for indices. Before 9:30 opens, let's mark out our higher time frame key levels again. The highs and lows we're willing to use as reversal points. You can see that price sweeps the highs before the 9:30 open. That tells us buy-side liquidity has been taken. Now the real question becomes, what happens at 9:30? At 9:30, we get clear lower time frame manipulation. If we drop down to the 1-minute time frame, we can see exactly how price engineers that move. After the sweep, what are we waiting for? We are waiting for a change in the state of delivery. Do we get it? Yes, we do. We see that shift from bullish delivery into bearish delivery on the lower time frame. That shift is our confirmation, so our entry is at that change in state of delivery. Our stop loss goes above the high that created the sweep, and our target is the opposing side liquidity, which is these lows. And you can see how cleanly price expands straight into those lows without hesitation. That is the New York reversal profile in action. London sets up the liquidity. New York sweeps the key level, lower time frame shifts, and then we get expansion into opposing liquidity. That's how you execute it. Moving on to the next example, here we have the London session open. The first thing we're going to do is mark out our higher time frame key levels. The main levels we can clearly see are these highs. So we're going to consider those as our higher time frame key levels. Now on the bullish side, we don't really have any clean swing lows available. There's nothing obvious to lean on. So instead of using lows, we're going to use this clean fair value gap. You can see that this is the cleanest PD array within this range, so we're going to treat that as our bullish higher time frame key level. Now we check if price sweeps any of these levels during the London session. Looking inside the London range, we don't get any sweep of the lows. There's no real liquidity taken during London itself, so there's no setup yet. Because of that, we wait for the 9:30 open. When 9:30 opens, we finally get something. Price pushes down into that higher time frame fair value gap and fills it. At the same time, the equal lows that were formed during the London session get swept. So now we have liquidity taken and we've tapped into our higher time frame PD array. Now we drop down to the 1-minute time frame to look for confirmation. On the 1-minute, we get an inverse fair value gap, and that's going to be our confirmation for entry. We can enter at that inverse fair value gap, place our stop loss below the low, and target the opposing side liquidity, which is the highs. And as you can see, price expands cleanly into those highs. That's how this daily profile works. It's straightforward. London sets it up. New York delivers into the level. We get lower time frame confirmation. And then price expands into opposing liquidity. Moving on to the last example, as you can see, we've already marked out the London session and the New York AM session. So at the London session open, the first thing we need to do is identify the significant higher time frame key levels. Looking at the chart, we can clearly see these highs and these lows. We're going to treat the highs as buy-side liquidity and the lows as sell-side liquidity. These are the levels where we expect potential reversals to occur. Now the next step is to see whether London sweeps any of these levels. If you look closely, during the London session, price does not sweep the highs. There's no buy-side liquidity taken during London itself, so there's no reversal formed there. Since London doesn't deliver into those levels, we shift our focus to the 8:30 open. At 8:30, price pushes up and takes out the highs. So now we have a clear buy-side liquidity sweep. That's important, but we're not entering yet. We still need more confirmation. Now we wait for the 9:30 open. At 9:30, we get SMT divergence relative to the 8:30 high. That adds confluence to the idea that the move above the highs was a liquidity grab rather than continuation. With that SMT in place, we drop down to the 1-minute time frame to look for confirmation. On the 1-minute, we wait for a clear shift in delivery. What we get is a change in state of delivery, and that becomes our confirmation. At that point, I can comfortably enter at the CISD. I'll place my stop loss above the candle that created the shift, especially since we also have an inverse in that area adding extra confluence. For targets, I'm aiming for the opposing side liquidity, which is the sell side liquidity resting at the lows. If we let it play out, you can see how cleanly price expands down into those lows. That's how you use the New York reversal daily profile. London sets the range, 8:30 sweeps liquidity, 9:30 gives confirmation, and then price delivers into the opposing side. And that's the New York reversal daily profile. London sets the range, New York delivers into the higher time frame level, we wait for confirmation, manage risk, and target opposing liquidity. No guessing, no forcing trades. If it doesn't align, we simply wait. When you follow this consistently and stay disciplined, you'll see how clean and repeatable this model really is. If this helped you, make sure to like the video and subscribe for more ICT-based breakdowns. Join my Telegram and Discord if you want to connect. And if you want to learn personally from me, check out the mentorship link in the description. I've also left funded account discount codes below. Trade safe, manage your risk, and I'll see you in the next one.